The AI boom isn't just building data centers, it's moving mountains of dirt as well, which has become a major growth driver for Deere & Company. The maker of John Deere equipment just reported an 18% jump in construction and forestry sales during its fiscal third quarter to $3.62 billion, pushed very greatly in part by demand for the heavy equipment needed to support the data center build-out. Joining me now in his first interview since being named CFO of Deere & Company is Brent Norwood, here in a Fox Business exclusive. Brent, first of all, congratulations on the promotion. You've been with the company for more than 20 years and really seen it grow. I would imagine 20 years ago, there wasn't really a data center business to speak of.
No, you're absolutely right, and thanks for having me on the show. This is really a new area of demand for us. You know, we are really riding the tailwinds in construction right now, and it's driven by large infrastructure projects, energy-related projects, and then of course data centers as well. And that's really been important for us in terms of monetizing the investments we've made. We've made more investments very quietly, made a lot of investments in our construction business over the last decade, and we're now starting to see a lot of that come to fruition.
What kind of investments?
Yeah, it's really started back a decade ago. We made the largest acquisition in Deere's history. We bought the Wirtgen Road Building Group, which added a different part of our portfolio. And then since then, we've also purchased out our prior joint venture partner, Hitachi. We control our own destinies on excavators. And this year, we released the all-American design and manufactured excavator that's rolling out off the production line in Kernersville, North Carolina. And then more recently, we put big dollars in our investment in digital. We bought a company called Tenna, and that's going to help us monitor and keep track of our customers' fleet management and their maintenance workflows and dispatch.
Can you tell me exactly what equipment pieces you make that are being used most for data centers?
Yeah, so it's all on the earth-moving side. We're seeing heavy interest in articulated dump trucks, dozers, and excavators. The larger equipment class is really what the data center activity is driving for us.
Let's get into some of the numbers that you just reported. It's kind of great that you just took over, and it's such a terrific earnings report here. Net revenue, $11 billion. That's a gain of 6% year over year. Construction forestry, we talked about, up 18%. Small agriculture and turf, $3.38 billion, up 12%. And you also raised the bottom end of your fiscal year 2026 net income forecast to $4.75 to $5 billion. What else is working for you here?
Yeah, you know, if we look at the earnings report today, I think the headline is really disciplined execution against a real challenging backdrop for large ag customers. You know, you've been following the story for a long time, and you know that for large ag, industry volumes have been getting progressively lower for 3 years in a row. And I think what we've been able to establish here internally and then externally to the street is we've been able to demonstrate a financial performance that allows us to continue to invest in our large ag products, everything from the portfolio that we have today and then the technology and solutions that's going to make our customers more profitable in the future. But you also highlighted the other parts of our portfolio that maybe we haven't talked about as much in the past. Small ag and turf and construction are the quiet growth stories within Deere right now. Both are doing really well. On the small ag and turf side, we've seen a renewed interest really in a lot of our turf products and residential products. That's driven demand. Dairy and livestock buying mid-sized tractors has really powered that business. And then, of course, on the construction side, we've already noted the impact that's coming from data centers, energy-related projects, as well as large infrastructure.
As great as all of that is, there is a bit of weakness here in specifically your production and precision division for the agriculture segment. You know, we were among the very first back in 2022 at the Consumer Electronics Show in Las Vegas to show the autonomous John Deere products. There we are running around that green machine, and it was fascinating to see. But what's the adoption there? Because it doesn't appear that it's really catching on that much. That's where the weakness was.
So one of the things we talked about today on the earnings call, you know, despite industry volumes being relatively low, we actually are seeing an increase in the adoption of advanced technology, things like autonomy, things like See and Spray. I know you've featured that technology on your show before. You know, this is a technology that uses AI to measure each plant in the field, delineate between a weed versus a crop, and just spray the weed. We're seeing an uptake. In fact, we have doubled our adoption rate this year of See and Spray technology. So all the machines that are going to going to be rolling down the production line next year. Almost a third of them are going to have this new technology. And that's really encouraging to see our customers, our farmers, continuing to invest in technology, even when margins are tight. And what that tells you is they're investing in technology that helps them to control their costs. Because if you think about where our customers are struggling the most today, it's in the hyperinflation from inputs, things like seed, fertilizer, and chemical. And we make equipment, we make precision technology that helps our customers do more with less. So we're very encouraged by the adoption we're starting to see in the market today.
No doubt the See and Spray is brilliant because, again, just for people who don't know this, we were all geeked out at Fox Business to see that this autonomous machine can actually see what's a weed, as you said, what's a weed and what's some dinky little thing to versus what's actually a great solid ear of corn, and then zap it. But so why then was that down 6.4% and due to lower shipment volumes?
You're right. I mean, the overall industry has been down 3 years in a row. Even though we're seeing an uptake on adoption, it's just on lower volumes. And really what farmers are struggling with today is tight margins, right? 70% of their cost structure relates to inputs. It's an input intensive industry. So again, the seed, fertilizer, and chemical and fuel. And we've seen in particular, fertilizer and fuel are up 20-30% year over year. And so that is putting some caution for our customers in terms of their CapEx budgets and machineries and the machinery budget that they have currently. But we're optimistic in that, we are starting to see order books begin to fill for next year. And, one of the things that we talked about on today's call is we feel pretty confident that 2026 marks the bottom of the ag equipment cycle. Now, I want to caution you, I think the recovery is going to be fairly moderate, and it's going to be governed by a lot of externalities, such as the conflict in the Persian Gulf, weather, commodity prices, et cetera. But we're pleased to see that order books are already starting to fill for next year.
Well, we got a lot of farmers watching, and you did something, you as in John Deere, did something that made them a lot happier, and that was to settle with the Federal Trade Commission on this issue where in the past, Deere required that any sort of changes or any repairs that were done on equipment had to be done by Deere, and that farmers couldn't repair their own equipment. Now that's changed. They are able to do that. There didn't seem to be a meaningful ding to your earnings this time around. Have you modeled for any issues where farmers will begin not going to Deere repair shops, but to do it themselves?
It's an important question, Liz. And, first and foremost, we would say we've always, allowed our customers the ability to repair their own equipment or with whatever equipment provider or, third-party advisor they trust the most, whether that's a Deere dealer or an independent repair shop. I think what the agreement with the FTC does is it really codifies and formalizes our commitment to provide the tools that make it easier than ever. One of the big outcomes from that was the introduction of the John Deere Operations Center Pro Service. Pro Service is an industry-leading tool that enables customers to download digital manuals, all the diagnostic tools, and here's the really important one, do software updates themselves. That's something that's really hard to do from an innovation and technology perspective, and that's something that we can do that is industry-leading, and it'll be interesting to see how the rest of the industry follows suit. What I would tell you over the long term, I think this will actually be a benefit to our aftermarket business. I think it'll help spur a more robust lifecycle solution business for Deere. So we're really excited about the agreement and what that's going to do. Because look, ultimately, I think this makes our customers more efficient, more productive. When they do well, we do well. So it's great to have this agreement behind us.
Brent, great to have you. What, you start as an intern 20 years ago?
No, not quite. But it's been quite a ride, and I'm super grateful to be in the role now.
Well, we'll be watching your climb. Thank you, Brent, very much.
All right, thank you.